With the crypto market beginning to break out and set new highs for the year, it's leaving many traditional experts scratching their heads. And this is because there is two big competing narratives going on right now. Now, the first is that we have all these mega institutions ready to launch their Bitcoin ETFs Q1 next year, and at the same time, we have the Bitcoin new supply getting cut in half, which obviously is extremely bullish. And the second is that there's a lot of people thinking a nasty recession is going to hit also Q1 next year, causing a big crash. And obviously risk assets like crypto are going to get hit the hardest. And so two big narratives going head to head right now, but the big question is, should we be going all in right now or playing defensive and waiting for a crash? And so in this video, we'll be checking back in with Raoul Pal as his research and analysis is showing that the big crash has already happened. And now is the time to be preparing for a mega bull market coming in 2024. And so we'll be looking at, first up, the triple cycle coming next year, which is massively bullish for all crypto. Then we'll take a look at why everyone is wrong about a crash coming next year, and the one thing that everyone is missing. However, then we'll finish up with the what if we are wrong scenarios. 3 scenarios to watch out for to help protect our downside. Okay, so lots of important things to cover, and first up, here's Raoul explaining about the 3 mega cycles all coming together, ready to hit next year, which will cause a massive bull market in 2024.
The world hit an inflection point in 2008, which was the global debt crisis, and we had a debt jubilee. Now, debt jubilees, most people would think of, you forgive all the debts. We didn't. We did this magic trick, which we said, you don't need to pay the interest on the debt. We'll make it all zero. And every central bank around the world cut interest rates to zero. Okay, that created an opportunity for every government to refinance their debts. So they all refinance, and they refinance them in this 3 to 5 year time horizon. And that set off a cyclicality to the economy that we've never really seen before, that every 4 years we get economic weakness, the increases of the balance sheet and use of interest rates as they come to refinance the debt. So this, like clockwork business cycle, which is based around the debt refi cycle, happens to be exactly the same as the US election cycle. It also happens to be exactly the same as the Bitcoin halving cycle. So all of these cycles are at the same time every time. So here we are today. Today, we're at the bottom of the business cycle. This is the kind of recessionary era. Businesses are laying off staff, inflation.
And so we have the central bank debt refi cycle, the Bitcoin halving cycle, and the US presidential cycle, all massively bullish and coming together to a computer screen near you in 2024. Okay, next up, let's talk about the big elephant in the room, and this is a nasty recession coming also in Q1 next year, which could cause another crash in risk assets. Well, here is Raoul explaining why he thinks everyone is wrong and the one thing that everyone is missing.
The forward-looking markets, technology and crypto, priced in a recession last year. And they've been recovering since because they've been following the forward-looking indicators of financial conditions and other things. Right now, stuff like the Russell 2000 and oil is living in the present day, which is slow economy. So they're at their lows. And everyone's like, what the hell is going on? Why are these tech stocks going up and everything else is going down? It's because they're forward-looking, as it is their job. So I've been very bullish. I saw the liquidity cycle, which is the key driver of all assets. The liquidity cycle is based around this interest rate cycle, which is based around this whole debt refi cycle. Liquidity started bottoming last year in October, November, December, and that gave us the signal to start getting long both crypto and technology. And that's got people scratching their heads. But our forward-looking indicators of the business cycle suggest we're going into what is, right now we're in macro spring. We're about to start moving towards macro summer. What is macro summer? Macro summer is when interest rates are falling, inflation is falling, and growth is picking up. That's the kind of holy grail for macro and for investing. And we should be in macro summer.
And so the one thing that everyone is missing, which is why Raoul believes everyone is wrong, has to do with leading and lagging indicators. Now, when the shit hits the fan, first this triggers the leading indicators, which is why it's the high-risk stuff that gets slammed first. And in 2022, crypto went on to crash 95%. 95%, and also tech stocks also took a beating. And then we have the real-time indicators, aka coincident indicators, things like the Russell 2000 and oil. And finally, we have the lagging indicators, most notable property or real estate. With a property, it can take months to go through, sometimes even years, just to make one sale. And as people are locked into their interest rates for many years, it doesn't impact people straight away. This can also take years. And so basically what Raoul is saying is that the big recession crash has already happened for crypto and tech, and they're now on the way back. And this is why you're probably now starting to see a lot of trouble in the real estate market. Okay, and to finish up, let's take a look at the what if we are wrong scenarios. 3 things that we still should be paying attention to.
The darker view is that the excess manipulation of money blows up the entire system. And that's a lot of people hold that view, that you end up with a hyperinflation or something of that sort, a total economic collapse. But I struggle to get to that answer because in every circumstance, when asset prices collapse or something goes wrong, they just print money. And when you're the world's reserve currency, it's bloody difficult to hyperinflate it. So what you end up with is this ridiculous rise in asset prices, which then gets rid of this ability to have this massive downside. Well, we've traded it off for something else, which is everybody's incomes basically get poorer in purchasing power over time versus assets. Okay, the other downside people would say, and there's validity to it as well, is that the excess use of monetary policy creates sticky inflation, and that therefore interest rates need to be higher. But I've lived through whole periods of higher interest rates and asset prices still go up. But even if rates stay at 5% for the next 10 years, it's not going to stop people buying technology stocks. Why? Because their ROI is much higher than 5%, so nobody cares.
There are 2 big narratives clashing right now. We have the Bitcoin ETFs and halving boom, and also a potential recession crash, both coming Q1 next year. Either way, we're still facing 3 megacycles coming next year, that being the halving, the debt, and the presidential cycles. The reason Raoul believes that 2024 is going to be a massive year for crypto and not bearish is because of leading and lagging indicators. And the 3 risks to still be aware of are a hyperinflation due to the mismanagement of money, sticky inflation where rates stay higher for longer, and the third one I will add myself is that if we do get a recession and another big sell-off in crypto. However, check this out. I just don't think it'll be as bad as a full-blown global pandemic scare which happened in 2021. That drop was very large, however, still by year end, it was an amazing year for risk assets, especially if you bought the crash. So there you are, guys. Hope you enjoyed. Now you tell me, are you bullish or bearish about Q1 next year? Let me know below. However, just remember to get rid of 100% of the comment spam and trading bots that plague YouTube comments. We are trying out the new SuperThanks commenting system. So to get your question or comment read and replied to, or just to say thanks, then use SuperThanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.